Hi, this is Mark Item with HONU Trading with a week in review for the week of July 17th, 2023. As always, remember this is for education only. No recommendations to buy or sell. Know your time frame and risk tolerance, and always remember that risk management is truly job one. Follow me on Twitter at HONU Management, at HONU MGMT, and if you find this valuable, take a moment to like and subscribe. Well, it was a strong week for the bulls. Last week in review, I talked about, gee, who snoozed more? Well, this week it was pretty clear. Da Bears. The smalls outperformed the biggies this week. Risk on remains in effect. For several weeks, we've been asking if the financials are out of the woods yet. I'd have to say today, yup. And finally, next week, Q2 earnings kicks off for real. So it was clearly another week for the bulls. The Bears were snoozing this week. The weekly heat map definitely had a St. Patty's Day vibe to it. Lots of green, lots of big green. Particularly, it seemed like the big caps did well. Microsoft up 2.38, Nvidia nearly 7%, Apple flat, Amazon up 4, Google up 5. Tesla was up 2.5 this week, but yet the smalls outperformed the bigs. So on the week, the biggies gained almost 2.5%. We had an inside week snooze fest last week. This week we had a strong week to the upside, and we're on a weekly basis, we're above the intermediate term trend, the 10-week moving average, which is above the longer term trend, the 30-week moving average, which is above the anchored volume weighted average price from the all-time high. All of those are above, I shouldn't say all of them, but price is well above that 415, 420 level that had been such a bugaboo for so long. The smalls actually did a little better this week. They were up about 3.5%. And then if we zoom in on the daily basis, now I've got your moving averages on this as well. And then the overhead supply that we'd seen on the weekly chart. So the 8 is above the 21 moving average, 50 is above the 200. All of those except the 200 are now above that resistance range 415, 420. We're also well above now a rising. By the way, all of these moving averages are rising, as is the rising average volume weighted average price from the all-time high. One other thing I wanted to point out here, and I've seen this somewhere on Twitter, I wish I knew who to give credit to, but the so-called golden cross, when the 50-day moving average crosses back above the 200, which happened right here on Monday, the 10th of April, excuse me. That's kind of maligned. Yeah, that's kind of lame. It doesn't work that well. Well, this time it actually worked pretty well. It would have gotten you in about 409, 410, and here we are sitting at almost 450. So that basic idea does occasionally work. Now, last couple of weeks, we've talked about a divergence in effect. And this is the slide of the daily from last week. We were above the August 2022 highs. We had relatively equal highs and a divergence in one of the momentum oscillators, the relative strength index. Even so, it was above the bull level of 60, or right at the bull level of 60. But this week, that's been pretty conclusively proven that was not a divergence. Again, I'm going to back up a slide. The last couple of weeks I said, yet it's not a divergence yet, because price would actually have to break down below these most recent lows to change the trend of higher highs and higher lows. Well, a divergence might get you leaning one way or the other, but it's not confirmed until price moves below those recent lows. In this case, we powered higher. That divergence, I would contend, is no longer in effect. That is your trend line. We not only broke that, but much more importantly, we broke that on a high in price. Zooming in on the week, we had 3 basically sideways days, although Wednesday was sideways after a much higher move after the CPI report. Thursday gained a little, also a gap higher after the PPI report. But Monday, and for the last several weeks, I've observed that Monday is basically a snooze fest. Why bother? So if you want to take a 3-day weekend, maybe take next Monday off. And as you'll see when we get to earnings, there's no compelling earnings next week. But now that I've said that, watch me jinxed it, and the old sportscaster's jinx kicks in. And we'll have a big move Monday one way or the other. So Tuesday was a strong day up in anticipation, apparently, of what were positive CPI numbers. We gapped higher on Thursday with CPI numbers. Today moved a little bit higher, but wound up unchanged on the SPY. For the week, up 2.5%. And skip through that. So our relative strength measures of the equal weighted S&P to the capital weighted, they all moved higher this week and then fell back a little bit towards the end of the week. Regardless, that trend is definitely higher, and it's showing broader participation in the market. Again, the smalls outperformed the biggies this week. Risk on is still in effect, and as always, a hat tip to Chris at Chavaco Capital. This is the S&P 1500. That's the 500 bigs, the 400 mids, and the 600 smalls combined into one index, relative performance versus intermediate term treasury bonds. And this gives us a very clear risk on, risk off measure, which, as recently happened, can go sideways inconclusively for a long period of time. But when it's conclusive, like the COVID crash, the 20 to 21 risk on move, the 22 bear market, that we're clearly back into risk on now. So looking back to the SPYs for a minute, again, SPY was up 2.5% this week, and the intermediate term treasuries were down 0.25%. So that's why this continues to move higher. Not only does SPY move higher, but IEI has moved lower as well. Partially, this is kind of surprising, the 5-year treasury, which is in the middle of that 3 to 5 year range, interest rates actually dropped on the week, but the 10-year was virtually unchanged, and the 2-year moved a little bit higher. On the financials, pretty clearly, I'd say they're out of the woods now. And XLF rallied. We had kind of an oops reversal down here, where we'd had a series of higher highs, higher lows, and now that never did break to a lower low, and it continued going up. Now, anticipating, and we had big bank earnings today from JP Morgan, Wells Fargo, Bank of America, Citi, gap higher and moved lower, but we're basically unchanged over the last 2 days, and still strongly higher on the week. The heat map of the financials, the big guys did really well. JP Morgan up 4, Bank of America up 2, Wells Fargo up 2, Citi unchanged, Visa and MasterCard up strongly. The others moved higher. We get more financial earnings next week, as you'll see in a moment. The big banks, they had been looking a little flaky in here. They've moved back to new highs, although right now, I'd have to say that's a slightly failed breakout. The smaller banks, they'd moved into rut-row, but I'd say they've moved back out of that this week. Haven't broken again above these highs, but they're looking a little better. Earnings season definitely kicks off next week. Not much on Monday, but on Tuesday we got Bank of America, Morgan Stanley, Lockheed Martin, Schwab. After the market closes, JB Hunt Truckers, Outboard Marine, Goldman Sachs, U.S. Bank, Halliburton, and so on. We really get into the big boys Wednesday after the close with Tesla and Netflix, IBM as well, although it's not as big as it used to be. Thursday, Taiwan Semi, Johnson & Johnson, Abbott, Intuitive Surgical after the close, American Express, Free Market, Schlumberger, The Mighty Slob, and that's it. So for the week, we continue to move higher, and as my buddy HONU always says, small losers win.